Hello. Thank you all for joining us this afternoon for this discussion on cryptocurrencies, blockchain, society, and art. And just real quick, by a quick show of hands, how many people here have used a cryptocurrency like Bitcoin or currently own some Bitcoin? Okay, that's a pretty good show. That's at least half people. So we're going to start by going down and doing a quick set of introductions so that you know a little bit about us. We'll talk for about 30 minutes and then open it up to Q&A. So if you have good questions, please write them down and we'll get to them. So we will start over here with Eleesa.
Hello, my name is Eleesa Dadiani. I'm the founder of Dadiani Fine Art in London, the first gallery that started accepting cryptocurrencies for works of art, and the first gallery in the world to start accepting cryptocurrencies for works of fine art.
Excellent. And my name is Patrick Barron. I'm the president of Ambisafe. We are a blockchain software company here in San Francisco. We help companies launch initial coin offerings, and we run a decentralized exchange.
Thanks, everyone. My name is Marcelo Garcia Casil. I'm the founder and CEO of Maecenas Fine Arts. We are a fundraising platform that securitizes or tokenizes multi-million-dollar pieces of art, making them accessible for multiple people to co-own the piece of art. We have offices in Singapore, which is where I live, so it's been a long flight. We also have offices in Geneva and London. So I'm very pleased to be part of the panel.
My name is Mark Lurie. I'm the founder of Codex Protocol. We're a decentralized title registry for the art and collectibles market. So we're bringing provenance onto the blockchain so you can track the ownership and history and identity of art and collectibles. And we're backed by a consortium of about 5,000 auction houses who are going to adopt this as a standard and make it possible to bid and buy in their auctions with crypto. So you can do that and then track and improve your ownership in the future.
So let's start with a quick overview. What is a cryptocurrency? What is a blockchain? Why does it matter? Just a couple of sentences.
Cryptocurrency is decentralized currency. It's the prime application of the blockchain, which is a digital ledger on which this currency is designed, essentially. And it's permissionless. It's not owned by any government, country, or the like.
Anything to add to that?
Only the fact that cryptocurrencies as a whole have seen more than exponential growth over the last 12 months. I think they increased in value more than 50 times. So it's everyone is talking about cryptocurrencies, and I think they're here to stay.
One of the most interesting parts about blockchain is it's basically a database that everyone owns, and because everyone owns it, no one owns it. And that enables you to use it while retaining privacy and absolute control. That's part of the appeal of using it for something like cryptocurrency, because you can store the database of your currency without disclosing your identity. It also makes it possible to do things with art that accomplish the same goal. And it also makes it possible to do things with code and computing that's equally run by everyone and thus controlled by no one. And those are really powerful things that have a lot of implications for the art market, but also for society more broadly.
Got it. So what are some of the things that are possible now with blockchain technology, with cryptocurrencies, that wasn't possible before? We'll start down here with you.
So in the case of Codex, we're creating a title registry for art. And historically, art is the only asset class that does not have a title registry, which is strange because a title registry is actually incredibly important. In most asset classes, you can't do anything without going to the title registry. Think about your houses. You couldn't get a mortgage. And in art, because people have never been willing to trust a central authority or a third party with all the art and wine and jewelry they own. It's never been possible to create a shared database or a system of record for the market. And that's made it very hard to do business in the art market. Across, it's one of the reasons for high commissions, it's one of the reasons for slow transaction speeds, it's one of the reasons for fraud and forgery. And the ability to create a shared database where you can preserve your privacy so you can prove the history is going to make it so much easier to do business. And it's especially important here because the whole value of art is often based on its provenance. And so I think blockchain can be very powerful. And that's one of the reasons that we're building Codex, because it's just possible now when it wasn't possible before because of the blockchain.
I fully agree with what you said. And blockchain is about building trust, but not building trust by having good reputation over time, by having a traditional institution that people feel comfortable with. It's about building trust by relying on cryptography, on computer protocols. So it's trust that doesn't depend on a counterparty. It's trust that depends on mathematics and computers. And besides creating that layer of authenticity that allows you to have a record that no one needs to maintain because the computer protocol is basically taking care of the integrity of the data. The other thing that blockchain can do really well, because it's been designed to do that, is to represent value and units of value. One of the biggest issues of the art market is the lack of liquidity. Art is not a commodity. Each individual piece of art is unique and it's not fungible. With blockchain, what you can do is you can represent digitally, once you have the provenance in place and once you have a protocol that allows you to create a record for the piece of art, you can create units, you can fractionalize the asset, and suddenly you're going from this illiquid single piece into shares or units of a piece of art that, if it's worth in the multi-million-dollar range, then it can be owned and transferred and transacted by a number of people, and that in itself creates liquidity. So I think blockchain allows the art market to have more trust and a way to register ownership and authenticity, and also allows to create liquidity in a market that traditionally doesn't have it.
Got it. So we've got provenance, being able to track things back to their origin. We've got the ability to create a liquid instrument out of formerly illiquid assets. Anything else to add that's possible now with the technology that wasn't possible before?
Well, with the blockchain, what we have here is it homogenizes trade. Because prior to this, you have too many jurisdictions doing too many things, and there's a lack of coordination. So with the blockchain, whilst there are certain internal rules on the use of the blockchain, the use of cryptocurrencies, it more or less it doesn't have such rigid differences. It doesn't have such rigid, divisions as, for example, traditional finance does, which is why global trade is a lot more easier to conduct now, having this technology. Because first of all, let's use Bitcoin as an example. We've not had a universal currency since the days of gold and silver. So this is the first time we've actually got a universal currency. And that in itself dissolves borders. There's a reason for why it's called borderless. Borderless currency, borderless trade. And it's precisely because, not only because innovations happen at the edges, but because this is a truly universal currency. So,
yeah, definitely. I want to go back to something, Mark, that you said about provenance. How do you go about merging the physical world with the digital world of blockchain?
That's an excellent question, and one I get a lot. So there's a few answers to the question. The first is that it's just something we've always done. I mean, in some ways, how do you merge physical pieces with paper records? You have them, you trust them, you verify them, you make a judgment based on what those are. I think the blockchain can provide a massive improvement to that process, because you can see who uploaded, who provided information about pieces. Now, you also have to make sure that that is actually tied to the piece. It's actually a really interesting answer. The first and the simplest is that there's ways to tag pieces. So you can put RFID chips on the pieces. You can do image recognition. It's getting quite sophisticated. There's a company called Dust, which sprays a very inexpensive diamond dust on pieces to create a 4D iPhone scannable map. So you can be sure that that's actually the piece that's, where from the digital record. But the more interesting and subtle answer is incentives often tie them together. There's not a great reason for why you'd want to separate a record of a piece from the piece itself. If the value is in the provenance, then let's say you sold a fake piece with the real records and tried to sell the real piece separately, you would just devalue the real piece and increase the value of the fake piece, and it's not clear why you do that. In the existing art market, there are certainly forgeries and fakes, but some of the most, many of the forgeries are not copies of an existing piece, but rather an unknown discovery with forged provenance from an artist, right? No one copies the Mona Lisa. They say they've discovered another piece by Da Vinci. And so I actually think it's a problem which seems very critical, but actually isn't as much as you think. And there's a lot of emerging technologies that make it possible to tie. And I think once you do that, then there's a lot of powerful things you can do, providing liquidity and creating a global market that were more difficult before. So I think it's a hard but actually pretty solvable problem.
And you had mentioned the global nature of cryptocurrency and how we now have this global borderless system of value transfer. Do people that have cryptocurrency, are they interested in purchasing art with it, trading it for art, and if so, why?
Well, first of all, people who buy crypto, they are starting to rethink how they see value. The idea of value is changing. Money in itself, traditional money, dollars, fiat currencies, they're not valuable. They don't increase in value over time. This is just a currency that allows you to exchange goods and services. So nobody's buying with the intent on holding it in order to then do something with it. So art and crypto are very interlinked in the sense that those who own crypto, they would want to put it into something that will also grow in value, because you don't want to part with something knowing, because anybody who buys crypto, and I'm sure that you would agree, that you believe in the longevity of the market. You believe that the market will increase in value. You're not just buying it because somebody told you. You've researched, you looked into it, and you've decided that, and you have looked at the history. And you see how the growth has been exponential. So if you're going to part with your cryptos, you're going to put it into something else that's going to grow in value. You're not just going to spend it on ice cream and coffee. And this is why there's a similar want with those who hold crypto into those who buy art, because art is not a lot of people, they don't buy art because they like the look of it. They buy art because they believe that it will grow in value. And this is why there is that strong correlation.
Yeah, and to add to that, I think it comes down to scarcity. So cryptocurrencies by design, they are scarce. They have a finite number of coins or tokens that you could ever have in existence, whereas traditional currencies, fiat currencies, we've seen governments through quantitative easing printing trillions of more money, injecting it into markets, and that in itself devalues the units of accounting that you have. So I think art and cryptocurrencies share that scarcity aspect, where if you believe in the scarcity of cryptocurrencies, and scarcity is going to drive the value up as demand increases. So the same happens with art.
And so when we think of cryptocurrencies like Bitcoin, we think of open, borderless, transnational, immutable, permissionless, and you can think of, I think of art as also being a very permissionless industry. You don't have to ask anybody's permission to go create something that you want to create. In terms of some of the other ways that we describe cryptocurrencies around being open, do you think that this technology, when applied to the industry, the art industry, will make it more open? Is that needed? Is that a good thing? What do you think?
I think it will definitely make it more open, but as we discussed previously, not every industry needs to be disrupted in its fundamentals. You know, this idea of disruptivism is something that we have fallen into because there's this new technology that's capable of doing it. But the problem we're having today is that a lot of the people who are setting up in the crypto space, they're not understanding fully the traditional industries and what exact change, however delicate, is needed in that industry. With the art, of course, the blockchain is capable of many things, like Marcelo has pointed out about fractional ownership, and it allows you to participate in not many of us can buy a multi-million-pound painting, but we can buy shares or tokens of that painting. And so the blockchain is making that permissible. But overall, I think not every industry needs disruption. And certainly, before we apply any of these technologies, there needs to be more understanding, especially from the perspective of companies tech companies who want to enter these traditional spheres, traditional markets. So, in the art business, in the art market, there will always be segments of it that will be protected. There's a great deal of protectionism in art, in fine art. Because it's an old world. But there are other parts of it that will be made more open to the public through the use of the blockchain so that people can participate. So to answer your question, absolutely the blockchain will open it, but we just must decide which parts of art need to remain traditional, need to remain enclosed and protected, and which are okay to be disrupted, if you like.
Do you agree?
I do. I think as with every tool, it depends how you use it. Cryptocurrencies and decentralized blockchain networks also are very good at providing anonymity. And with the value, combined market cap value of cryptocurrencies being in the billions, close to $500 billion now, I think it would make it quite easy for art dealers to facilitate transactions. Make the whole sort of ecosystem more opaque. But if you think about the technology itself, and in particular the art market is way behind in terms of technology compared to other financial industries. And even like if you take a non-very progressive industry like real estate, they already have some technology innovations within, whereas fine art is very much operating in the same way as it's been operating for centuries, the way art dealing works, the way galleries operate, even the auction houses, the mechanism hasn't changed that much. You still have people in a room bidding for a piece, and the highest bidder gets the item. So I think there's a huge opportunity for the fine arts market as a whole to leapfrog several generations of technology and jump straight into blockchain, which is something that other industries can't afford the luxury to do because they're already invested in technology and they have to amortize the effort and migrate what they have into the new world, whereas fine art doesn't have any legacy. And that's why I think the media are very excited about all the use cases of applying this technology. There's no register for fine art objects, and so there's nothing to migrate. We can start afresh and we can do it very quickly. So yeah, fully agree. If it's used properly, it can create a lot more openness and make it more inclusive, because as Eleesa said, part of this market operates in a very elitist approach, and that I think there will be benefits in changing that and making it more open.
I don't know. I mean, I think it sounds like what you're saying is that the fact that it is, there are some barriers and there is this, not everybody can come in, is part of what drives the value and part of what, it's almost a good thing to support the industry. Is that, did I interpret you correctly?
Yeah, I mean, when you produce, you know, when say Ferrari only makes 150 cars or 200 cars, the whole world wants those cars, and there's a reason why each one of those cars costs so much. So that's you know, there's the mentality of private exclusive clubs being formed everywhere, and where there's money involved, in a way it should be that way, because in order for us to now partake in an industry that has built centuries of value, the reason we can is because that value has already been created through those traditional means. And also to add to an earlier point, this is the art market is very dealer-centric. And the reason it hasn't changed for centuries is because, in that respect, is that it doesn't need to. You've got people who spend their whole lives understanding paintings, understanding artists, understanding history, and then passing on that knowledge. It's a very personal approach. So I think, in a sense, it could be a little bit naive to think that an industry can come and suddenly replace that, and you know, and create a machinized parallel to that, or machinized alternative to that. I don't believe it should, and I don't believe it can. I think that this is a human-to-human thing. When you're selling a piece of work, that's when we're approaching like individual. When you're selling an individual work, an individual important work. When you are monetizing the whole thing, creating a product, creating an instrument, that's slightly different. But that need for the dealer, that need for their expertise, will always be necessary in art.
And Mark, what do you think? Is the technology going to disrupt the industry, and is this a good thing?
So I think there's two parts to that question. One is what will happen, and the other is what do we want to happen, what's good and what's bad. I don't think blockchain, I can't think of any particular reason why blockchain would disrupt the industry. I'm also not, I think there's parts of it that are elite and parts of it that are very democratic. I think that's fine. I think blockchain will probably reinforce both of those. I think blockchain's fantastic for the art market because it's just gonna help everyone. I mean, I just see no downside. I mean, it lets you track data more easily. It lets you get liquidity more easily. It lets people who couldn't invest in things before trade in them. It lets people around the world buy and transact more easily. Like, those are all great things. I'm really not sure who they hurt. I certainly think they're going to help dealers. I don't think it's going to replace dealers. Dealers serve an important function. Same with auction houses. Same with artists. If anything, it presents opportunities. There's now going to be a whole new category of digitally scarce art. I think that's just great. Now, is it good or bad? I think that's a separate question. And some people probably like the fact, or like to see art democratized. In many ways, the closed nature of art that increases value supports artists and lets us generate art. So there's pluses and minuses to anything you do to the art market. And I'm not sure I think it necessarily needs to change. I think it can be both, and art can be all things to all people.
Yeah, absolutely. And so, shifting gears here a little bit, some of the interesting use cases that I've seen as it relates to art and the creation of art, and includes things like being able to pay musicians when you stream their music directly without having to go through intermediaries. Of course, being able to track the provenance of either a physical or a digital creation all the way through its life cycle. What are some of the other use cases that you've seen or that are theoretically possible that you expect to see that you're excited about?
Well, there's too many to mention. There's, for example, I think if we look at the humanitarian side of things, there are women in disadvantaged communities, like, for example, in Afghanistan, where they're able to, through doing things, through doing little jobs, they're able to directly earn cryptos for those jobs instead of having their brother, father, uncle take control of their finances, as is custom in those countries, especially in Afghanistan in this particular instance. So these women are able to, earn their own money and thereby gain or understand what it is to be in control, I suppose. So there are really positive things happening around the world. I mean, this for me is a very interesting use case. I mean, you hear of these things happening more and more, where people are able, through doing little jobs, earn their own money, and it is their money they're earning. So that's I suppose one of those.
One thing that I believe is truly revolutionary, and I know it's not me saying it, but I think everyone in the industry, in the financial industry in particular, are very excited. Is about smart contracts. So in a nutshell, smart contract is a piece of code, a program, a set of business rules that you can deploy on the blockchain, and in doing that, you're decentralizing the process. You're relinquishing control of the rules, you're stating them, and you're trusting the computer protocol in executing those rules. So that's really groundbreaking, because it means that once you publish the rules of your process, everyone can see them and everyone can know for a fact what's going to happen if the conditions of the contract are met. And this has huge implications for the art industry, because you continuously have. This is very much a peer-to-peer industry. You're transacting. You said that it's permissionless, and you're right. I mean, you can bump into anyone who owns a piece of art, and you can strike the transaction there and then. But which is great. But the issue is that you have huge counterparty risk. You're basically exposing the whole value of the transaction to the counterparty honoring the agreement. In a smart contract, you completely mitigate that risk, because you're trusting a piece of code with the execution of the agreement, and that's irrevocable. Like, once the conditions are there, the contract would execute, and you know that for a fact. And one thing that we are particularly, in our case, doing with smart contracts is that we are exposing all the pricing discovery processes. So when we bring pieces of art into our platform, a very challenging aspect is determining the value. And so now there's no two valuation experts which would agree on the price of a piece of art, because it can be quite subjective. So we believe in efficient markets, that efficient markets are much more accurate at pricing assets than experts. But if we create a market that's centralized, then we're just simply pushing the counterparty risk away from the participants into ourselves. So you're basically telling everyone, don't trust each other, just trust us. And that seems to be like, the wrong solution for a problem. So what we've decided to do was to implement the Dutch auction process, which is the price discovery mechanism that we use, into a smart contract. So we're giving up control over the process, and we are letting everyone participate in a way that they can prove upfront that the rules of the auction are predictable, they're well known, and the validation is not going to depend on someone deciding to bypass the rules, because computers always execute the code in the same way. So I think it's a great tool to use smart contracts to bring transparency, to bring predictability, reduce risk. The way we're implementing them is just one use case, but there's a whole host of applications, transferring ownership, Once you have a decentralized register, it's another great use case for smart contracts on the blockchain.
Mark, anything you're very excited about that you've seen it's either transpiring or that you expect to take place as it relates to the technology and the industry?
I mean, one of the things I'm most excited about within the art market is actually Maecenas and the impact of fractionalized ownership, because art is something that a lot of people like, and a lot of people talk about and they say they like. But it's very difficult to just engage in it, especially if you're young or you may not have sufficient wealth. And the ability to kind of have trading cards and like just engage and, you know, have a stake, have a vested interest, and make bets about art and artists is just such a huge engagement mechanism that brings people into collecting and brings people into art. And I just don't think art really has that today. And I think that will hopefully re-energize collecting amongst like the younger generations. So I think it's just a great, I mean, aside from liquidity, which is a very obvious, you know, need of people who own, it just engages the next generation, and art engages people. And it also makes it more meritocratic, because the art market's a little difficult because you don't really know who's an expert. You don't really know who's good and who's not. And the ability to see people predict and then see the outcomes of their expertise and their knowledge and their beliefs is at the end of the day going to make art more meritocratic. And I think that's just like an exciting thing that I think is good and I like.
Cool. Well, so we have about 15 minutes left. What questions can we answer for you? I think we have a microphone that, yes, excellent. Who's got it? Right over here, yes.
So I have two questions. The first one for Eleesa. I'm curious to know which currencies people are purchasing art in and what types of buyers, and also how the buyer behavior is different with fiat currencies versus cryptocurrencies.
I think, well, first of all, the experience we've had with art in particular is through Bitcoin. I mean, we've sold other luxury items through other currencies, but with art, I've only ever sold it in Bitcoin. There is, I suppose, the buyer is slightly different. They tend to be a little, maybe, I don't know, younger, a little more experimental, and I think generally there's a feeling of safety. When people transact in crypto, they feel that their privacy is protected. I think this is important. I think we must distinguish between anonymity and privacy. You know, when people talk about cryptocurrencies and they say they're anonymous and they sort of assign all those negative things to it, well, actually, it's not anonymous, it's private. And every buyer, any person who is, within his rights to transact in a private manner. And this is what we can offer, and this is what we have when we transact in crypto. So I hope that answers.
And also, okay, so one more question for you, and then I have one for
Mark.
Mark, yes, okay. So what is the with the vast fluctuation of value in cryptocurrency that happens so quickly, I'm curious how that works with like artists and how they feel about accepting that, and the way that the how much it's purchased for and how much is transferred to the artist gets mediated.
Well, first of all, when you agree a trade, you're not going to wait 2 weeks before you conclude it. You're going to do it instantly, okay, more or less. So the value, whilst it is volatile, first of all, we look at the markets holistically. We look at what is happening. You know, I've not really had an experience where we agree a price and then, you know, within 30 seconds or 60 seconds or whatever it is, the price fluctuates to...
So the price is negotiated in the currency versus...
Well, of course, I mean, okay, the buyer would know that a certain price needs to be realized. So a lot of the time, the artists would take a part payment in crypto. Not all of my artists who, they're not, not all of them accept crypto. So I still have to make the necessary transfers or, if you like, conversions into crypto. But there are certain mitigating things that you could use. For example, we would accept Bitcoin. If I can't convert immediately, I would hold it in Tether. Which is a non-volatile currency. So there are measures you can take without compromising the value of the piece. But generally, we've not really had a problem with that. I mean, you learn to adopt and you learn to use internal mechanisms in order to then leverage price.
Thank you. And for Mark, it seems like controlling the opacity of provenance is what really empowers a lot of the art houses and the galleries. So by making, I'm totally also on the thought train that putting provenance publicly on the blockchain it's already an inevitability, so it doesn't really matter. But it seems like the incentives for current existing houses and the current power structures are contradicting those of what the blockchain would be doing for provenance. So I'm curious what your thoughts are on that, and also how that is going to reorganize the art ecosystem.
So I think the main function I think auction houses and dealers provide and brokers is not actually their knowledge about the item. That's a good thing. But that benefits, that's a need they have. They need to confirm the item is what it is, and they need to, it's part of what a service they're providing to the market.
It's sort of an insurance if I bought from a reputable gallery or a reputable art house, because if it is a fake piece, the art house is clearly de-incentivized to be selling a fake piece.
Yes, that's right.
The reputation will suffer, and that's essentially what their entire business is.
That's right, but their entire business is connecting buyers and sellers.
Yeah.
They're brokers. Making sure the piece is what it is a necessary part of that service, but it is not what makes the money. And for the most part, it is not what makes the best auction houses or the best galleries the best auction houses or the best galleries. What makes the best auction houses is that they know all the buyers and know all the sellers, and they have a good brand, and they have big client service departments, and they have hundreds of years of history. The specialists who actually, know what's what, they go from auction house to auction house. Sometimes they bring business if they really know those clients, but often they don't. And so I think assessing authenticity, let's just talk about the auction market to begin with, is not really what they want to be in the business of at the end of the day. It's only downside for them if something turns out to be fake. It's not upside if it turns out to be real. That's just the bar. So anything they can do to help them just mitigate that risk, they're going to be really happy with, because then they can focus on making money, which is interfacing with buyers and locking up good supply. And so, so I actually, and that's a lot of the reason why this consortium of auction houses have come together and said we would like a standard, because we don't want to be selling fakes. That hurts our business and it hurts our reputations. The one premise I would reframe is having art be provenance tracked on the blockchain does not mean it's public. It just means that if you are looking at a piece and the information about it, you can verify where and when that information came from and who owned it in the past. But the information itself doesn't have to be stored on the chain, just the hashes of that information. You can hide all the actual identifying information about the piece. So for example, in Codex, we store it off-chain. If you are not the owner of the piece, you can see nothing about it. The owner of the piece controls the permissions on who sees what. And so it doesn't really take power away from the owner or from the auction house or the gallery. It just enables them to prove the information is what it is.
So does that remove the decentralized aspect of blockchain information?
Decentralization.
Essentially, then Codex will become its own centralized place of this information. So it's okay.
So I think there's two ways to think about decentralization. we're not the only place where information is stored. In fact, it's stored off-chain, but many auction houses are actually going to host their own data. Collectors could host their own data. Any service provider could host the data. We just track the reference to that information and confirm that information is what it is. So just because the information is not on the chain doesn't mean it's not decentralized. Decentralization means that it's not really in one person's control.
Yeah.
One person can exert leverage over it. It doesn't mean that it's stored on decentralized computers necessarily. And so I would argue it's still
But I guess what I mean is
decentralized.
so Codex will be holding all the information about the provenance of a piece. So essentially, Codex would become like the new art house that has access to all this information. Okay. That's pretty...
No.
Okay.
And it's very important to clarify that because we work with a lot of people in the industry, and I would not want people to think that that's the case. Codex is like open source software. It's basically a registry of hashes that lives on, and links that lives on this decentralized blockchain, right? Yeah. The code's there for everyone. The database is out there. Anyone can read it. But the hashes are like serial numbers for data elsewhere. And that data can be stored by anyone and owned and controlled by anyone, not just by like my company. Similar to Napster, right? And so does that answer? I'm not sure I'm doing a great job of
I guess
answering
I'm
the question.
confused as to how the information is getting secured. So if all the information for the ownership is just not publicly on the chain, and if what you're doing is just linking between different people, then each link is its own vulnerability, or it seems to contradict this concept of. It just seems to be a new form of centralizing.
There's protocols to store information in a decentralized way. So, for instance, there's this protocol called IPFS, which allows you to store files of any kind in a network of computers. So, by combining decentralized storage with encryption, with decentralized management of hashes, which are serial numbers, anyone holding the keys to open the original data can then combine that with the hashes to verify that the data is authentic, that it hasn't been changed, it hasn't been modified, that the transaction date hasn't been modified, that the parties that were part of the transaction were not modified. So it creates an irrefutable record of proof. But that doesn't imply making the information publicly available. You can still control who can see it and when, and you can revoke that access. So participants are centralized, if you will. There's only one Christie's. There's only one Dadiani art gallery holding the keys to a specific set of data. But the storage and the management is defined by protocols. It's not defined by an entity. You're not at the mercy of this entity going rogue or trying to abuse the position of power. That's what makes it decentralized. The control is decentralized.
What other questions can we answer? Who else has a question?
Well put.
In the back there. Yes, sir.
Mark, you mentioned scarcity in digital art. Could you talk more about that space?
Sure. There's enormous amounts of digital art out there. I mean, it's a medium, and it's one that's easy for a lot of people to access, which means creativity can kind of run free. It's never been able to be monetized, which is too bad because that means it's difficult for artists to earn income and focus on it. But with blockchain, you can prove who owns that piece, even if it's a digital record. And CryptoKitties is a great example of that. And that enables people to create scarcity out of digital art. So it can't really, I mean, it can be copied and pasted, but there's one provable owner. And insofar as you can do that, you can start building value in it. And when you build value in it, then people can support themselves off it. And when people support themselves off it, they can go to much greater lengths to build increasingly wonderful things.
Think about photography. So digital photography is very hard to monetize because anyone can just take it, and it's very hard to track that someone is copying your file. You have to rely on clever artificial intelligence and data mining to basically scan the whole internet looking for this image. Whereas with blockchain, you could create a digital proof of ownership, and you could combine this with arbitrary scarcity and say, I'm granting a license to mark on this specific photo for this amount of time to be used in this publication, and you can have a timestamp and a seal, cryptographic seal that proves that. So it makes it really easy to implement copyrights and to monetize, allows artists to monetize this.
All right, one last question, and then we got to wrap it up.
And this is a question for the panel. I heard the idea of fractional ownership being explored. Is that a model that actually exists with a fractional ownership of physical artworks? And I was wondering if you could unpack that idea a bit.
Yes, it already exists. It's not an innovation per se. If you look at art funds, that's essentially fractional ownership of a collection of art pieces. The problem with the traditional structure of a fund is that, firstly, it still becomes an illiquid vehicle because you're locked into an art fund for 5 to 10 years. You're trusting the manager of the fund to deliver on the promises, meaning they need to be able to sell the pieces in future at a higher price to produce yields. And the subscribers to the fund, they have no control, they have no visibility, no transparency. They blindly trusting the fund managers. And there's been quite a few unfortunate cases of art funds deliberately deceiving investors, and that didn't turn out very well. So the fractional ownership is not an innovation. Using blockchain as a secure and trusted platform to facilitate fractional ownership, that's the real innovation. It's like digital art. You can't really prove that you own digital art. So with blockchain, you can prove that you own a piece of something that's bigger. When you accept the fact that blockchain is almost a perfect accounting system, and essentially it's a ledger that's impossible to forge, then it becomes a perfect natural transaction for moving financial assets around. So I'm biased because that's what my company does. But I believe it's not limited to just art. It's going to transform the whole industry. The opportunity that I see is connected with something I said earlier. Other industries have significant investments that have been made in technology, and that makes the incumbents hesitate to migrate again into a new technology. This industry doesn't have that burden. You can jump at zero cost into a new technology, and that's what I'm find out is the use case for blockchain and fractional ownership that I'm the most bullish about.
All right, well, thank you all very much. We'll be around if you have additional questions.
Yes, let's give them a round of applause. So this concludes our panels for today. We will be opening again tomorrow at noon, and at 1 is the first panel talking about the return of investment in art. And at 6, we will be transforming the stage to welcome DJ Sake 1, and then also Tortured Soul. So stick around, get some cocktails, and mingle. Thank you.